Welcome back. I am Bree Beers of Bree Beers & Associates, and today we're talking about write-offs. All right, one of the biggest perks of being a business owner is your ability to write off business expenses against your taxable income. But what exactly does it mean to write off an expense? Today, that's what we're talking about. We're going to define the words write-off, business expense, tax deduction, talk about what all of those terms actually mean to you as a business owner. So Johnny Rose, aka Eugene Levy's character in Schitt's Creek, gives us the simplest definition of a tax write-off. He says a tax write-off is a business expense used to reduce your taxable income. So I don't get all of my tax advice from pop culture, you guys, but this is seriously the easiest way to define a write-off, and I thought it was just perfect. And if you don't watch Schitt's Creek, then you may not appreciate it, but if you do, I put the clip in the description so you guys can go watch the clip because it's really funny. So what we learned from Johnny Rose here, you guys, is that the terms write-off, business expense, tax deduction are basically all interchangeable. So when we say I'm writing off this business dinner, or this trip is a tax deduction, my business bought this scanner, so it's a business expense. They all mean the same thing. So now that we know the lingo, let's talk about what a tax deduction, a write-off, a business expense actually means to us as a taxpayer and a business owner. When you're self-employed, your business brings in revenue. All right, this is your gross revenue, your gross receipts. Some people call it above the line income, but it's all the money that your business brings in for providing the good or service that you do. Okay, so it's the exchange of money for your product or good or service. So for me, my gross revenue is all the money my clients pay me for preparing their tax returns. If you're a photographer, it is all the money your clients give you for working with them on your photo shoots or your video shoots. Okay, if you're a bookkeeper, same thing. It's all the money, right, that clients give you. Those are all service-based. Let's think goods. Let's say you make t-shirts, right? If you make t-shirts, it's all the money that your customers pay you for providing them with your awesome graphic tees. All right, so that is all of our revenue. And then what is great about being a business owner is that all of that revenue that we brought in, that's not what we're taxed on. We get to deduct all of the expenses that we incur in order to operate our business. So not only the cost of goods to produce, so if you produce a t-shirt or a coffee mug or keychains, right, the cost of goods is the money paid to actually make it, but all of the other expenses that we incur running our business, we get to deduct from that gross revenue to get down to our taxable revenue. So let's talk numbers. Let's use an example. So in 2020, I made $10,000. I wouldn't be in business if I only made $10,000. I made $50,000 in my business, right? $50,000 came to me as revenue for providing my service to my customers. And then I had expenses. Let's say I had $20,000 in expenses, right? So this is the money I had to pay for rent, for the software to prepare tax returns. Maybe that includes the money I paid for some of the help I needed to run my business, okay? So $50,000 minus the $20,000 that it cost me to run my business means my taxable income is $30,000, all right? And that is the number that we talk about and we focus on when we talk about running our business and what our business made this year. So maximizing our business deductions in turn reduces our taxable income and therefore reduces the tax we owe when we file our tax return. So being self-employed also allows us to deduct a portion of our normal everyday living expenses as a business deduction. So what do I mean by this? I mean a portion of our cell phone if we use our cell phone for business. I mean a portion of our vehicle if we use our vehicle for business. even a portion of our home if we have a home office. All of these are expenses that we incur whether we are self-employed or work for someone else. But when you work for someone else, you don't get to write them off on your taxes. When you're a business owner, you do get to deduct a portion of these expenses as a business deduction. That's why when you talk to any of us at Bree Beers and Associates, we always ask if you have a business, if you're self-employed, because being self-employed is one of the easiest ways to see tax savings, to reduce your tax liability. It's an easy tax planning and tax saving strategy. So an important note, I want to make sure if you guys have tuned out, tune back into me, okay? I don't want you to spend money just to spend money. All right? I get so many people, right? Like, that's a tax deduction, that's a tax deduction. Watch that clip from Schitt's Creek that I just, talked about, because that's how so many business owners get, right? They just get right off crazy. But what I want you to remember, okay, is that for every dollar you spend in your business as a tax deduction, as a business write-off, is a benefit to you to the extent of whatever tax bracket you're in. Okay, so what does that mean? Okay, so the most common tax bracket is the 22% tax bracket right now in 2021. Okay, so that means I'm paying 22% of whatever my income is in taxes. Okay, so if I made $100,000, essentially, right? You with me? I paid $22,000. So what that means, you guys, is for every dollar that I'm spending in my business, every dollar of tax deduction that I'm taking, I'm saving 22 cents in taxes. Okay, so yes, it's great if this is money you have to spend to operate your business. Great, perfect, do it. That's what it's there for. But what I'm not telling you to do is go out and just spend all of your money because you want to save money on your tax bill. All right. Having cash in your business is more important than saving an extra 22 cents on your tax bill. Okay. So there is a balance there. So keep your expenses to what you need in order, to what you need to run your business. Okay. Don't just spend frivolously because you're going to find yourself with no cash to actually operate. Okay, so in conclusion, right, being self-employed, being a business owner does bring this advantage of having tax write-offs and being able to deduct things on your tax return, right? But make sure, again, that you're balancing those things of deducting your expenses to reduce your tax liability and keeping enough cash in your business to run your business. Okay? If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly, highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.